Welcome to the ICT or SMC Beginners course. Today we are covering candlesticks. For those of you that have never read, looked at, or traded a candlestick chart, which is what you're currently looking at, this video is going to be essential. We're going to cover what a candlestick is, what the open, low, high, and close price is, as well as what a body and a wick are, how time is expressed over price using a candlestick, and ultimately how to read the basics of a chart and why an algorithm has to use these 4 key principles in a candlestick or time over price based chart. So if this all looks new to you and you aren't familiar with TradingView is actually what this software is that allows us to view time over price in the financial markets. And I do have a link in my bio called my preferred charting platform. It is TradingView, so you're more than welcome to look that up as well if you want. However, I suggest you go and make an account there and start to save and analyze these things as I talk about them in this video and in the future. Okay, so now that we understand what this platform is, let's take a look at candlesticks here. So there are actually 2 major types of candlesticks, and they are differentiated between color. So for me, a bullish candle or a candle that is moving in an up direction is going to be green, and a candle that is bearish or moving in a down direction is going to be black. If you're brand new to trading and you've just set up your TradingView software or platform, you're going to notice that this candle, the down close candle or the bearish candle, is going to be red, and that means the price is moving down. Now, I have changed mine because I just like to look at them this way, and some people say that it has a benefit to your psyche or your psychology when trading. I don't personally subscribe to that too much because I make money when the markets go up as well as down, so it doesn't make a big difference to me. But if that is something you're interested in, you're more than welcome to play around with your colors as well. So now that that's out the way, let's understand what a candlestick is. So a bullish candlestick, or a candlestick that represents price going up, looks like this down here. Everything included in this blue box is a bullish or up moving candlestick. Everything in the blue box now is a bearish or down moving candlestick, and it is a representation of price over a specified amount of time. Now, each candlestick is made up of 4 very specific key data points. These data points are an open, a close, a high, and a low. Okay, so now that we understand what a candlestick looks like, let's now understand what a bullish candlestick is, and let's dissect what these 4 data points actually look like in the form of a candlestick. So just as a reminder, this is a bullish candlestick, which means that price is increasing over a specified amount of time. So now that we understand that, let's dig into what the opening price, which is up here, what the opening price of this candlestick looks like. And that opening price is actually represented by the bottom of this shaded area. The closing price is the top of the shaded area. So from the bottom of the green price to the opening, or the top, of the green shaded area, that is your open and your close price. And together, those 2 price points or data points make up the body of the candle. Now, these black lines that you see on the top and bottom of the candle are what are actually referred to as wicks. And when we look at the wicks here, we can understand that we have a high point of this candlestick and we have a low point of the candlestick. So what that means is this candlestick would have opened price here, traded down to the lowest point that the candlestick formed before trading all the way up here and ultimately closing its cycle or time period right here. So now that we understand what this candlestick looks like, we can dig into what time looks like in terms of the expression of a candlestick. So if we look up here where my cursor is, you can see that right now we have this D selected, and that stands for 1 day. That means that for every candlestick that is formed, 1 day has passed. We can also change this to a 5-minute, 15-minute, or even a 1 minute or lower. And that means that for every time we see a candlestick, price has opened. For example, 1 day, price opened. It then went to the lowest point in its day to its highest point within the day, and then closed the day here before a second day or a new day would have opened up and done a similar thing in terms of creating either a bullish candlestick like this or a bearish candlestick. So now that we understand the bullish candlestick and what each of these price points or data points represent, let's digest and dissect this bearish candlestick and what that looks like. So now let's hop into this bearish candlestick here, and as you can see, I've just marked it out here on the left to make it clear for you. And once again, this black candle means that price is decreasing, whereas this green candle means price is increasing. So that means the value of the asset that you are trading is going down. So with that being said, these 4 data points are all on this candlestick the same that they are on this candlestick. However, they are not all in the same location. So the first thing that I want to bring your attention to is that although the opening price on a bullish or green candlestick is at the low of the shaded area, on a bearish candlestick or a black candlestick, the opening price is at the top of the shaded area. So that means that the closing price is at the low of that shaded area. And just like the bullish candlestick, these 2 price points make up the body of the candlestick. Now, everything else here is the same. When we look at a bearish candlestick, we have the wicks that are the same, which means that this is the high price and this is the low price. The big thing here to note is the opening price and the closing price have reversed, which means that price opened here, traded up to this point, traded all the way down here, and then ultimately closed that period, whether that's a daily time or in 5 minutes. So for example, this could have all happened in 5 minutes. 5-minute cycle could have opened here, traded up to here, traded all the way down to here, and then ultimately closed that 5-minute cycle at this price here before creating a new candlestick and ultimately doing the same thing. So now that we understand candlesticks in this regard and how to read them, we can now understand why these 4 data points are so important. So now if you've heard about trading before and you understand supply and demand, you'll know that lots of people are under the impression that price is moved based on buying pressure and selling pressure, which means that if there's an influx in buyers, that means price is going up, and if there's an influx or increase in selling pressure or sellers in the market trading that specific asset, the price will go down. Now, I'm here to tell you that I don't actually believe that. I believe the markets are completely rigged and manipulated, and they are done so via an algorithm. This algorithm controls price and moves it according to plan. These highs, these lows, these opens, and these closes are predetermined before the candlestick even opens. So, why are these 4 points so important? These are so important because these are 4 data points that no matter who you are or where you are around the world, these 4 data points are given to every single trader, every single institution, and every single algorithm that may be running on or through the financial markets. That means that cryptocurrencies use these same data points, futures use these same data points, stocks use these same data points, and so do Forex, as well as anything else you might think about like interest rates or things like that. So now that you understand that these 4 data points are given to every single trader and they are not able to be changed based on your brokerage depending on the asset that you are trading, which we'll get into later because I personally like to trade futures contracts, which means that there is no difference between brokerages, unlike things like Forex, but that's a topic for another video. The important thing here to note is that these 4 data points are given to every single trader across the globe as long as they have access to the internet, which means that every single person can make a decision off of these 4 data points, regardless of if you believe the algorithm or an algorithm is controlling and manipulating price like I do. It doesn't matter. You can believe in buying and selling pressure if you'd like. My suggestion is it's not very helpful to believe or think that way, but you definitely can because these 4 data points are not changed no matter how you look at or analyze the charts, which means that every trading decision that I make are based off of one of these 4 data points. And that is going to bring us into our next video, which is going to talk about swing points and market structure. But until that, let's take a look at an actual candlestick forming so you can understand what it looks like to see both a bullish candlestick and a bearish candlestick form in real time. Okay, so now that we're looking at a time-based chart here, just note that we are looking at 1-minute candlesticks, and on the right here where my cursor is, you can see when the candlestick expires or closes. So we've now just opened up a new candlestick right here, which means that the shadow has not been made yet, and now we have created this wick above us. So right now we're looking at a bearish candlestick, which means that the opening price is the top of this shaded area here, and now we've completely flipped that. So now then right back again. As you can see, these wicks are going to form, and eventually, as we get closer to the expiration or closing of this candle, price will start to make a more definitive reaction or directional bias or move. So taking a look as this candle forms here, this is now our opening price. We're still looking at the same candle until this is done, and we have opened here. We have closed down to this point and are now trading up or moving price in a bullish or upwards direction. This is currently the highest price that this candlestick has made over this 1 minute cycle. So as we are about to close this candlestick here, we can see in 2 seconds, in 1 second, and now this candlestick is formed and a new candlestick can open up. So we had opened price here, traded to the low, traded to this high point right here, and then ultimately closed the candle here. Looking at this candlestick here, we have opened and immediately moved down, which is why we don't see a wick above us. So we opened price here and immediately started to move down all the way so far to this low point here. So we have now traded back up here, and as you can see, the closing price, which hasn't closed yet, but this is what the current closing price is, has started to move up, which has shifted the candle from black to green. So right now we have no direction. We are right over top of our opening price, ultimately pushing up here again, and we're going to have to see where this candle closes. If you don't see a shadow, or a body, and you just see a line like that, that means that price's opening and closing price are the exact same. So as this candle is about to expire or close here, you can see on the right, we have made another bullish candlestick here, forming the low and actually closing price on the high. So we never made a higher high than we did when we closed this 1 minute cycle, ultimately leading to a new 1 minute cycle. Now, if you've watched price or charts before, this has been absolutely boring to you just watching this and listening to me narrate it. But if you haven't, I hope you found that insightful. If you do have any questions about how to read a candlestick chart, how to make a TradingView account, or where to find it, make sure to let me know in the comment section down below, and I will do my absolute best to help you out. And until next time.